I was listening to that conversation live when you were doing it with Greg Peters, and it sounded like the builders, not buyers part really stuck out to me, and talking about the history of mergers that have gone sour in the industry. But it sounds like, at least according to your reporting along with Kelsey, that they could be in the game for it.
Well, I think the build, not buy is still the Netflix mantra. It's a company that has avoided doing major M&A throughout its entire history. Some of that informed by co-founder Reed Hastings' experience at his prior company, a software company, that kind of grew through a lot of mergers, and it didn't end very well for him or for the company. But they do take a look at everything. They study it, they run the data, and I think Greg Peters' colleague, co-CEO Ted Sarandos, has always been kind of enamored of studios and lots, and if they could get their hands on Warner Brothers, the studio, and perhaps more importantly, the characters and IP that Warner Brothers owns and that HBO owns, that's something that Netflix would be very interested in. They have no interest in the cable networks like TNT, TBS, CNN. I don't even think they have very much interest in the HBO streaming service because they can just feed the content into Netflix. So if there's a way to do a deal that gets them what they want without the stuff they don't want, they're open to it. But my read on the situation, even though we have reported that Netflix and Comcast are interested, which is true, is that you've got one very clear interested party in Paramount, and you have a Warner Brothers Discovery wanting to either get a better offer from them or find someone else or have more leverage in these conversations. And so they're basically saying, that's it, we're for sale, come and make an offer, and they want to get as many people in the tent as possible so they have as much leverage as possible.
All right, so Lucas, Warner Brothers, as you said, rebuffed Paramount, Skydance's initial takeover around $20 a share for being too low, according to those familiar. So is this still a live deal? Are we expecting Paramount Skydance to come back? Yeah,
definitely. It is still a live deal. There are still conversations happening. I think there have been reports that Paramount has made several offers. They're clearly exploring how best to proceed. Do they need partners? Do they need to be hostile and go public with it? You know, what is the number at which the Warner Brothers Discovery board has to say yes, even if management doesn't want to do the Paramount deal, because it would likely lead to their dismissal. But I would not expect Paramount Skydance to walk away just because they're in kind of soliciting other bids.
Is it plausible for us to think that Warner Brothers Discovery could remain an independent company when the dust settles, that no deal could be done?
That's looking increasingly unlikely. I think it is possible that they go through with the split and do a deal after that, or come up with some arrangement in which there is still a split, but one piece goes to one of these buyers. But it's not feeling, because they're already going to split the company. So I think, a year from now, 18 months from now, the odds of Warner Brothers Discovery being a whole and independent company are incredibly unlikely. But what exact shape it takes, we don't know yet.
So let's play out the Netflix part of this a little more, Lucas, because I'm intrigued with the idea of Netflix actually getting the studio, but not being interested necessarily in the legacy TV networks that are part of Warner Brothers Discovery. What would happen to that legacy side of the business if the studio were to get sold to Netflix or another buyer?
Well, it's hard to know because I don't think they're progressed enough in those talks for me to have the answer. But look, Warner Brothers Discovery was already going to spin off its TV networks. It can continue to do that, right? It can say, okay, that studio and streaming business that was going to be one part of kind of one entity going forward, that can go to Netflix, and it's up to Netflix, or they can negotiate how the HBO network fits into that, or the HBO streaming service fits into that, or they can find another buyer for that, right? If they've come to an agreement, if they feel like Netflix has made a great offer for just the studio and the lot and maybe some of the HBO programming, maybe they can take the rest of that and package it up, and where Comcast, which is spinning out Versant, which is its cable networks, is interested, maybe those two can come together. Now, once you're dealing with these spin-cos, it gets very complicated for tax reasons about what you can and can't do, because one of the reasons they choose to spin is to save money on taxes. But there's a lot of, I think they're trying to project optionality here.
Well, for Warner Brothers Discovery, I'm assuming they want to get as much as they can for all of their assets. Can they do that by breaking it apart? Is that really the smartest route, but maybe more complicated, versus just getting rid of the company in one full shot?
Well, they clearly think that there's more value in the parts than they're getting valued at in the whole right now. That's one of the reasons they're doing the split spin, however you want to talk about it, because they think the parts are worth more than the whole is currently being valued at. So yes, I think they feel like they could sell the studios and streaming for almost as much as the whole company is trading at right now. The real question would be, if you do that, is there actual value in the cable networks that are left over? Which, I guess we'll find out. There's certainly not going to be as frothy a market for those as there would be for studio and streaming.
People who work there certainly hope there's value. Just real quickly, is there a clock ticking on this, or could this drag on for a little bit longer?
It could drag on. I spoke to an investor earlier today who said they'd be surprised if they saw this resolved this year. I don't know if that's the case, but they have opened up a process. You think back about how long the Paramount Skydance process ended up taking. It was a year before there was a deal, and then another year for it to actually go through. So I would imagine we've got at a minimum a few months left.
Okay, Netflix happening after the bell. We'll hear about their latest quarter and the upcoming current quarter that we're in right now. K-pop Demon Hunter is certainly going to be a star of the call. What else do we need to understand about today's report?
I mean, Netflix earnings, especially now that they don't report subscriber numbers, are a little less interesting than they used to be. It's a company that has been very steady. Investors tend to want fireworks. They want huge beats, and Netflix sometimes delivers that, but most often especially recently, I feel like they've delivered sort of modest beats. Most people expect them to post pretty good results. They had the movie this summer. They've had a steady stream of new programming, and Netflix has told us all along that their programming in the back half of the year is much better than in the first half. The question with earnings is always expectations, right? The street expectations for the company are already really high, so even if the numbers are pretty solid, they might not live up to what investors want or expect.
20 seconds, Lucas, does anybody really care now that there's like the Warner Brothers stuff? Is that what
they definitely care? Because,
okay.
look, Netflix is a $500 billion company, so its results matter.